Good morning, everyone. Looking at the US stock markets, the Dow has then recovered from the recent low of around the 21,750 points. Since then, the Dow has rallied to close above all the EMAs, the EMA 20, 60, and recently has retested the EMA 120 level, which is around the 24,750 points. After 3,000 points of gains over the past close to 1 month trading period, we are seeing some mild profit-taking activities on the Dow Jones back towards the 24,000 psychological level. So for now, we might be seeing some of the sideways trend on the Dow Jones index until we can see the breakout above the 24,000 arrow points. Then only we can confirm for further recovery back towards the 26,000 psychological level, while the support will be located towards the 24,000 on the Dow Jones index. So for now, this consolidation will be taken as a healthy sideways movement as investors digest their recent sharp gains of about 11 to 12% over the past 1 month trading period. Similarly, at the S&P 500, we are seeing the S&P 500 has rebounded from the recent low of around the 2350 towards the 2675 level. It rejected the EMA 120 level as well, and before staging a mild pullback. For now, we are expecting just a sideways movement on the S&P 500 to trend back towards the 2600 to see how it holds there. If we can see from support and recover along this 2600 above the 2675, then only we can confirm for further recovery on the S&P 500 to trend back towards the 2800. So the next target will be located towards the 2800. If there's a breakout above the 2675, stop loss will be located below the 2600 level on the S&P 500. Similar with the Dow, the S&P 500 has also gained about 330 points over the course of a 1 month trading period. So any pullback for now will be a healthy one for investors to digest their gains before the next recovery to resume. Okay, some updates on the crude prices. The crude prices has endured a very volatile trading period after falling towards the 42.50 level. Since then, we are seeing a strong rebound on the crude prices as recovered back above the 50 before staging just a sideways movement. Earlier, we did see a sideways movement as well between the 50 towards the 54 or 55, and recently we are seeing a similar pattern was being formed. So for now, this could be the potential inverted head and shoulder candle. This was the head and shoulder formation. This is the left shoulder, the head, and the potentially the right shoulder. So this could be the potentially inverted head and shoulder formation that we're expecting. If it could, upon the breakout of 55, we might see another wave of recovery on the crude prices back towards the 60 or even towards the 65 US dollars barrel amount. In the meantime, the 50 will serve as the middle support level on the crude prices for now. Back home, we are seeing the FMKLCI has then recovered from the 1630 towards the 1700 due to the window dressing activities in the end of last year. Since then, the FMKLCI has been traded a sideways manner between the 1665 towards the 1700. It managed to breach above the 1700 on the 22nd of January, but there's no follow-through buying interest on the FMKLCI as the key index has once again pulled back towards its consolidation mode. For now, let's continue to monitor to see if the FMKLCI could continue to breach above the 1700 and maintain its position above that there. By that, then only we can confirm for further recovery towards the 1740 level. Stop loss or the support will be located below the 1665 on the FMKLCI. On the low liners wise, we are seeing some positive sign on the FM small cap index as well, despite some bearish candles was being formed, but the next day itself, we are seeing some bargain hunting activities on the FM small cap index again. So for now, let's continue to monitor for the breakout above the 12,200 points level. Upon the breakout of 12,200 points, we might see further upside towards the 12,800 points, but gains will likely to be limited over the next coming days as the RSI is really quite overbought right now. The MACD histogram has really been trending lower over the past couple of days. So we might be seeing some of the mild recovery and potentially a mild before the pullback to resume. On sector-wise, you can look at some of the technologies sector. The Dow Jones has been close, just marginally lower, negative 0.1%, but the Nasdaq has gained 0.7, whereas the S&P 500 has also gained 0.1%, lifted by the technology sector, which added 0.9% on overnight. So on the local front, the technology sector has also been seeing some signs of a recovery after the hitting the recent low of 2720 level. Since then, we are seeing the technology sector has recovered above the EMA of 20 level and continues to maintain its position above that over the past couple of days. On the technology sector wise, it has also formed the bullish candle on yesterday. For now, let's monitor to see if there's any breakout above the 30 level. Should there be a breakout above the 30, we might see further upside towards the 32.30. While the support will be located towards the 28.78 level on the core prices. Sorry, on the technology stocks. On technology stocks wise, you can look at FunCan. FunCan has earlier made a very strong wave of a rally towards the close towards the 1 ringgit psychological level before giving up some of its previous rally gains towards the recent low of 58 cents. It formed a hammer candle along the 58 cents before trading higher, forming the short-term higher high and also the higher low formation. And recently, FrontCan has also formed the symmetrical triangle formation breakout on yesterday, accompanied by some of the improvement in volumes being traded by the bullish candle and also the symmetrical triangle formation breakout on a FrontCan. We are expecting a price to see a further rally towards the 85 cents or even towards the 89 cents level. Stop loss will be located below the 70 cents level on our FrontCan. Things appears to be quite positive on FrontCan right now, as you can see that the MACD indicator has been trading higher, forming the higher high, higher low formation. MACD histogram has created green yesterday, whereas RSI continues to maintain its stance mostly above the 50 level for the past 3 to 4 weeks trading period. Another technology stock will be Alsoft. Alsoft has then hit the recent peak of around the 1 ringgit and 48 cents, 47 cents level, forming the double top formation. Since then, price has staged a sharp pullback just towards the 1 ringgit psychological level. It formed some support along the 1 ringgit psychological level before staging a short-term breakout above the 1 ringgit and 10 cents. With the breakout above the 1 ringgit and 10 cents, we are seeing price has staged the flag formation or breakout yesterday as well. Or this could be taken as a T+4 formation breakout. This was a T day with high volumes. Price pullback over the next 3 days with low volumes, and on yesterday we are seeing another higher than the previous 3 days average volumes being traded again. So this is the T+4 formation, a breakout or the flag formation breakout that we are expecting for Alsoft to trend higher towards the first target price at the 1 ringgit and 21 cents towards the 1 ringgit and 29, stop loss below the 1 ringgit and 5 cents, and if you can take further risk, the final defense is located at the 1 ringgit psychological level on Alsoft. Another technology company will be Datasonic. Datasonic has endured a very sharp selling pressure towards the 30 cents level recently. Since then, we really see price has recovered with some of the very high volumes, similar with the previous sell down volumes, was being traded on Datasonic as well. Since then, price has been forming the higher high and also the higher low formation over the past 2-3 months trading period. And recently, we are seeing Datasonic has formed a recovery above the EMA 20 level as price rebounded, accompanied by some of the improvement in volumes being traded. On Datasonic right now, let's monitor for the breakout above the 53 cents level. Should price breach above that, then we could expect price to trend back towards the 59.5 cents or even towards the 69, stop loss below the 46 cents level on Datasonic. If you look at the chart or on the indicator as well, we are also seeing the higher high and also higher low formation being traded on Datasonic, implying that the trend is still intact right now. Some other stocks that we can watch out for firstly will be IGM. IGM, alongside with most of the construction companies, has staged a recovery IGM price has recovered from the 1 ringgit and 39 cents level. Since then, price has hit some resistance along the 1 ringgit and 83 cents. Yes, I then hit the 1 ringgit and 83 cents resistance level in the mid of November. Since then, we are seeing another resistance on the 1 ringgit and 83 cents during the mid of this month. But on yesterday, we are seeing IGM has formed a gap up formation as price formed a bullish candle to breach above the 183 and also to close above the EMA 120 level. With the breakout above the 183 on IGM, we could expect further upside towards the 199 or the 2 ringgit psychological level. Stop loss will be located below the recent low, which is currently located at the 1 ringgit and 70 cents level on IGM. Last two company for today will be, firstly is Malakoff. Malakoff has earlier recovered from the recent low of around the 74.5 cents a level. Since then, price has staged a very strong rally towards the 99 cents. But the next day itself, we are seeing some of the dodgy candle being formed, and subsequently the price gave up its previous rally. But on yesterday, we are seeing price has formed the recovery, forming the bullish candle to close above the EMA 20 level. This could be the potential breakout, the pullback, and the potential continuation pattern for Malakoff to firstly retest the 99 cents. That will be the immediate target price for now, followed by the 1 ringgit and 4 cents stop loss below the 81 cents level on Malakoff. Last company for today will be Xinhua. Xinhua has seen a very sharp trading interest after price has been beaten down towards the 62 cents. We are seeing a lot of volumes being traded on Xinhua over the past 1.5 months trading period as price continues to creep higher, recently closing above the EMA 120 level, forming the consolidation breakout above the 80 cents. Yes, attempts to breach and also close above the 80 cents, but it did not close above that. But on yesterday, we did see a breakout and a closing above the 80 cents level with the high volumes continue as well. For now, we are expecting price to continue to creep higher towards the 90 cents. That will be the immediate target price for now, followed by the 1 ringgit and 5 cents. Stop loss will be located towards the 176 cents level on Xinhua. If you have any questions, you can put in the chat box. I'll reply you shortly. There's some question here on firstly is Gamuda. Gamuda, like most of the construction companies, has been on the recovery phase. Gamuda has earlier recovered from the recent low of 2 ringgit and 2 cents level. Price has subsequently hit the recent peak of around the 2 ringgit and 89 cents. It rejected the EMA 120 level before staging a pullback. But on yesterday, we are seeing some of the bullish candle was being formed on Gamuda. For now, let's see if there's any fall through buy interest on Gamuda over the short term period. Let's monitor for if there's any fall through buy interest above the 276. If there is, then this could be the potential breakout pullback just towards the EMA 20 and the continuation pattern that we're expecting Gamuda to retest at least the 289. Once the 289 level were to be breached, further upside will be seen towards the 3 ringgit and 10 cents level. Stop loss will be located towards the recent low, which is currently located at the 2 ringgit and 59 cents on Gamuda. On a good way, price is just on a sideways movement. It did stage some of the like 1 day rally, but the next day itself we are seeing another wave of pullback. Once again, we are seeing a 1 day rally. Subsequently, price pullback again, rally, and price once again a pullback. So for now, this type of a rally could be taken as the accumulation on a good way over the longer term period. If you look at the shorter term period right now, in order to see further recovery on a good way right now, we need to monitor for price to close, breach, and also close above the 22 cents level. Until we can see a breakout and a closing above that, then only you can confirm for further recovery on good way. Firstly, towards the 25 cents. Secondly, towards the 28.5 cents. But if price were to violate below the 20.5 cents level, then you have to cut loss immediately, or else your final defense will be located towards the 18.5 cents level on a good way. But for now, I think price will likely to be trend on a sideways trend, given that not much of the trading we interest centered on good onto a good way right now. So price might just linger on a sideways until we can see a firm breakout above the 22 cents and the follow through buy interest on the next day. Then we can confirm for further recovery. If there's no further question for today, then we'll end the morning briefing. Thank you.